Hello and welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamoen. In this podcast, we dive into the latest developments, trends, and regulatory changes in the real estate and mortgage industries, providing you with insights to help you make well-informed decisions. Today, we're going to tackle an increasingly relevant issue: the growing number of Canadians carrying significant mortgage debt into retirement. Is this a cause for concern, or have we entered a new normal? Let's explore. Financial planner Shannon Lee Simmons, with nearly 20 years of experience, has noticed a significant shift in the financial landscape over the past 5 years. More of her clients are approaching retirement with hefty mortgages, some being as much as $500,000 away from paying them off. As Simmons puts it, usually the amount of money that you'd have to save to get that wrestled down before retirement is so far past what would be affordable or possible that it's not in the realm of realistic. A recent report from Statistics Canada highlights this growing trend. In the first quarter of 2024, Canadian households with a main earner aged 55 to 64 held a combined $315.7 billion in mortgage debt, up significantly from $224.2 billion in the same quarter of 2020. For those aged 65 and older, mortgage debt increased to $141.2 billion from $97.2 billion over the same period. The report also notes that Canadians with variable rate mortgages, or those who have renewed in the past 2 years, face higher monthly costs due to a series of rate hikes by the Bank of Canada. Elke Rubach, president of Rubach Wealth, Holistic Family Advisors, notes that Canadians across all income levels are finding it more challenging to pay down their mortgages before retirement. The pandemic, unexpected job losses, health issues, inflation, and the current cost of living crisis have all contributed to this struggle. Rubach poignantly states that this has stolen the Canadian dream or the Canadian promise for many. Traditionally, downsizing has been a popular choice for retirees looking to manage large mortgage debt. However, many are now hesitant to part with their homes. Adult children are staying home longer, and the next generation faces barriers to home ownership, making the family home a central gathering place. As a result, some retirees are extending their careers, continuing in jobs they enjoy, or transitioning to lower demand roles or passion projects to manage mortgage payments. Financial experts agree that managing mortgage debt in retirement requires a sound budget. Paul Shelistowski from Meridian Credit Union points out that many are surprised to find they can maintain mortgage payments with a well-planned budget. Jason Pereira, a financial planner at Woodgate Financial, adds that living with mortgage debt is not necessarily problematic unless it becomes unsustainable. He suggests extending the life of the mortgage with a longer amortization period or pulling equity out of the home as potential solutions. Victor Tran, a mortgage agent at TMG The Mortgage Group, advises those considering tapping into their home's equity or refinancing to be proactive. Applying for loans while income is steady is crucial, as retirees may face difficulties if their income drops. Some lenders are willing to lend based on equity or net worth, rather than just income and credit ratings. Paul Shelistowski emphasizes that Canadians should not view carrying a mortgage into retirement as a failure in financial planning. Instead, it may reflect a balance between saving for retirement and enjoying life both before and after retirement. As we wrap up today's episode, it's clear that carrying a mortgage into retirement is becoming more common, and while it presents challenges, it does not necessarily spell financial doom. With careful planning and a shift in perspective, retirees can manage their mortgage debt effectively. Thank you for tuning in to the Ontario Mortgage and Real Estate Insights podcast. I'm Steve Hamoen, and I look forward to our next episode where we'll continue to explore the trends and changes in the real estate and mortgage industries. Until next time, take care.